Equity markets welcomed Samvat 2080 with a special 1-hour Muhurat trading session on November 12. This new Samvat, analysts believe, may see prolonged period of uncertainty before gaining clarity on road ahead. This is because the global geopolitical situation remains grim, where Israel war has accentuated an already crippled global order due to the Russia-Ukraine war. Speaking at the Business Standard BFSI Insight Summit, Chris Wood of Jefferies said, "The markets are assuming that the conflict won't escalate into a broader West Asia war. Oil prices have barely risen, so clearly any likely escalation has not been priced in." Brent crude oil rose to a high of $94 a barrel soon after the conflict broke down between Israel and Hamas. Investors feared that any possible flare-up in the war could clog already choked supply chains. However, waning demand from the US and China have dragged the prices below $80 a barrel mark for now. In the near term, the trajectory of oil prices would remain a key monitorable for the markets in the new Samvat, as it may alter global inflation trajectory. Besides, its impact on monetary policies and bond yields will be keenly watched.
Savage monetary tightening by the Fed. The US economy is likely to tip into a minor recession in 2024, and that Fed is likely to cut interest rates when there are signs of the economy tipping into a recession. Or it can happen earlier than that. If inflation comes down, the Fed will start easing rates and the bond yields will start declining.
Apart from the imported volatility, analysts expect Lok Sabha elections in the first half of 2024 back home to keep investors on the edge.
We have the state elections, we have the general elections. In the worst situations of the current ruling alliance not forming the government, we could see a sharp reaction followed by a recovery as markets dislike uncertainty and value certainty.
The Indian economy has seen a significant growth catch-up in the past decade. Analysts believe the return of the ruling party with a strong majority government will re-rate the markets meaningfully from current levels. And once this political event is behind the markets, the focus would shift to the sustenance of earnings growth.
We would be looking at pickup in the consumer demand and the consumer sentiment in the ongoing festive season, pickup in the earnings as well as the margins for various companies, and FII flows for India.
Overall strength in the domestic economy, elections, earnings growth, inflation trajectory, and peaking of interest rates and geopolitical crisis outcomes over the next few quarters would drive the return for the new Samvat year 2080. On November 13th, domestic retail inflation data for October along with global trends would dictate market moves.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She has ambitions of becoming a brand. Business Standard.